Question 1. Which of the following best describes the role of the Nevada Division of Insurance in regulating insurance companies in Nevada? A. The division is responsible for creating insurance policies and setting premium rates. B. The division ensures that insurance companies comply with state laws and regulations, audits their financial status, and oversees claims handling practices. C. The division reviews and approves all claims submitted to insurance companies, ensuring they meet industry standards. D. The division's primary role is to create insurance fraud investigations, individuals, and report cases to the federal government. Answer. B. Explanation. The Nevada Division of Insurance is responsible for regulating insurance companies by ensuring they adhere to Nevada's insurance laws and regulations. This includes financial audits, ensuring solvency, and overseeing company conduct, including claims handling and market conduct. The division does not create insurance policies or set premium rates, but ensures compliance with established standards and regulations as laid in a Nevada Insurance Code. Option is incorrect because the division doesn't create insurance policies or set rates. Those responsibilities fall on the individual companies. Option C is inaccurate because the division does not directly handle claims but oversees insurers' claims practices. Option D is also incorrect as the division handles fraud prevention but not by investigating individual fraud cases alone. Question 2. Mr. Williams, a licensed insurance broker in Nevada, has received a complaint from a client regarding an inaccurate premium quote. The client alleges that the broker used deceptive practices to quote a lower premium than was realistically available. What is Mr. Williams' best course of action according to Nevada insurance law? A. Disregard the complaint as it is a standard misunderstanding about premium rates. B. Report the issue to the Nevada Division of Insurance as a potential case of deceptive trade practices. C. Immediately offer the client a refund and proceed with a new premium quote without any further actions. D. Disclose the complaint to the insurance company and ask them to resolve the issue directly with the client. Answer. B. Explanation. Under Nevada's insurance laws, it is mandatory for insurance professionals, including brokers, to adhere to fair practices, and deceptive trade practices are prohibited. In the case of suspected deceptive quoting, Mr. Williams is required to report the issue to the Nevada Division of Insurance as part of his professional and legal responsibilities. This aligns with the state's consumer protection regulations that require transparency, fairness in insurance transactions. Disregarding the complaint, option A, or simply offering a refund without further action, option C, would not adequately address potential violations of law. Option D does not fully address the broker's legal obligation to report misconduct to the division. Question 3. In Nevada, an insurer is required to submit rate filings to the Division of Insurance for approval. What factors are considered when the division evaluates the rate filings from an insurer? A. The insurer's financial stability, projected loss ratios, and profit margins, as well as the competitiveness of the rates compared to other insurers in the state. B. Only the projected loss ratios and the amount of claims paid out in the last year. C. The insurer's profitability in other states, regardless of the Nevada market. D. The insurer's rate filing must meet federal standard for rate consistency across the country. Answer A. Explanation. The Nevada Division of Insurance evaluates rate filings based on multiple factors, including the insurer's financial stability, projected loss ratios, and the profitability of the insurance policies. The goal is to ensure that the rates are adequate to cover potential claims and that insurers remain solvent while being competitive within the market. Nevada law does not base rate approval solely on claims paid out in the previous year. Option B, and profitability in other states. Option C is not the primary consideration. There is no overarching federal standard for rate consistency across states, as each state has its own regulatory process. Option D. Question 4. Which of the following is a requirement for obtaining a Nevada insurance producer license? A. Applicants must have at least 5 years of prior experience in the insurance industry. B. Applicants must pass a state-specific exam that covers Nevada's insurance regulations and laws. C. Applicants can apply for a license without taking any exam if they have a non-resident license in another state. D. Applicants must be a resident of Nevada to apply for the insurance producer license. Answer. B. Explanation. In Nevada, to obtain an insurance producer license, applicants must pass a state-specific exam that covers Nevada insurance laws and regulations. This is required regardless of prior experience in the industry. Option is incorrect because Nevada does not require 5 years of prior experience. Option C is also wrong as non-resident applicants must still meet Nevada's licensing requirements, including passing the state-specific exam. Option D is incorrect since Nevada allows non-resident licenses, which means applicants do not have to be Nevada residents. Question 5. Which of the following best describes the types of penalties for a licensed insurance professional found guilty of violating Nevada's insurance laws? A. Penalties can include monetary fines, suspension or revocation of licenses, and civil lawsuits for damages. B. Penalties are restricted to criminal charges only with no administrative consequences. C. The only penalty for violations is a probationary period where the individual is monitored for 1 year. D. Penalties can include suspension of license for up to 10 years without the possibility of reinstatement. Answer A. Explanation. Nevada's insurance regulations allow for a range of penalties for violations, including monetary fines, suspension or revocation of licenses, and potential civil lawsuits for damages depending on the severity of the violation. Nevada law provides flexibility in penalties to address various offenses, but does not impose standard 10-year suspension, option D, or restrict penalties to criminal charges only, option B. Probationary period described in option C is not typically the sole penalty for serious violations. Question 6. Mr. Roberts is an insurance adjuster in Nevada. After reviewing a claim, he determines that the damages are more extensive than initially estimated. What is Mr. Roberts' legal obligation under Nevada insurance law regarding the claim? A. Mr. Roberts must adjust the claim to reflect the new estimate and notify the policyholder of the update. B. Mr. Roberts can ignore the discrepancy in the estimate since he has already provided an initial estimate. C. Mr. Roberts is only required to submit the revised estimate to the insurance company without informing the policyholder. D. Mr. Roberts must notify the Nevada Division of Insurance of the discrepancy and the damages. Medium. Answer A. Explanation. Under Nevada insurance law, when an adjuster identifies a discrepancy or error in the initial claim estimate, they are legally obligated to revise the estimate accordingly and inform the policyholder of the updated information. Transparency is key in the claims handling process, and the adjuster must ensure that the policyholder is aware of any changes to the claim amount. Option B is incorrect because failing to update the policyholder would violate consumer protection standards. Option C does not meet the legal requirements because the policyholder must be informed, not just the insurance company. Option D is incorrect because the Division of Insurance is not involved in handling individual claims or damage estimates. Question 7. Which of the following is an example of an unfair trade practice in Nevada insurance law? A. Offering a policy with lower coverage limits than similar policies available in the market. B. An insurance company increasing a policyholder's premium due to the policyholder's increased risk without proper notice. C. Broker accepting commissions from an insurer for recommending policy without disclosing the commission to the policyholder. D. An insurance agent providing client with clear and accurate policy options to meet their needs. Answer C. Explanation. Nevada insurance law prohibits insurance professionals from engaging in unfair trade practices, such as accepting undisclosed commissions from insurers for recommending certain policies. This practice creates a conflict of interest and may not be transparent to the consumer, violating ethical guidelines for insurance professionals. Offering policies with lower coverage limits, option A, is not necessarily an unfair trade practice unless it's done deceptively. Increasing premiums due to higher risk, option B, is not unfair if the insurer follows proper notice and regulatory procedures. Option D reflects proper conduct and does not violate any laws. Question 8. In the context of Nevada health insurance, what is the primary purpose of the Nevada Health Insurance Exchange, NVE? A. To regulate health insurance premiums and set rates for insurers. B. To provide a platform for individuals and small businesses to shop for and purchase health insurance coverage. C. To monitor and audit health insurance companies' claims payouts. D. To oversee the certification of health insurance brokers in the state. Answer B. Explanation. The Nevada Health Insurance Exchange, NVE, is primarily a marketplace that allows individuals and small businesses to shop for and purchase health insurance coverage. It provides a platform where consumers could compare plans and find affordable health insurance options, particularly in line with the Affordable Care Act account requirements. Option is incorrect because the NVE does not regulate premiums. It provides access to coverage. Option C is inaccurate because the NVE does not monitor claims payouts but focuses on providing a marketplace. Option D is not correct as the exchange itself does not oversee the certification of brokers. This is handled by the Nevada Division of Insurance. Question 9. Which of the following is true regarding the continuing education requirements for licensed insurance professionals in Nevada? A. All licensed insurance professionals must complete 24 hours of continuing education every 2 years, including 3 hours on ethics. B. Continuing education is required only for insurance producers, not for adjusters or brokers. C. No continuing education is required for any insurance professionals if they have been licensed for over 10 years. D. Continuing education is optional and there are no penalties for failure to meet the requirements. Answer A. Explanation. Nevada requires all licensed insurance professionals, including producers, adjusters, and brokers, to complete 24 hours of continuing education every 2 years. This includes at least 3 hours specifically dedicated to ethics. Continuing education ensures that professionals remain up to date on changes in regulations and industry standards. Option B is incorrect as continuing education is required for all licensed professionals. Option C is inaccurate because continuing education is required for all licensees, regardless of the duration of their licensure. Option D is incorrect as failure to meet continuing education requirements can result in penalties or license suspension. Question 10. Which of the following statements regarding Nevada's unfair claims settlement practices is correct? A. Insurance companies are required to provide prompt and fair settlements when the company is liable for claim. B. Insurance companies can deny claims for any reason without providing valid explanation. C. Insurance companies must settle claims within 60 days of receiving the initial claim, regardless of the complexity. D. Policyholders' claim can be denied solely based on the insurer's internal policies without regard for the merits of the claim. Answer A. Explanation. Under Nevada law, insurance companies are required to provide prompt and fair settlements when they are liable for a claim. The Fair Claims Settlement Practices Act mandates that insurers act in good faith and follow legal and regulatory requirements in processing claims. Option B is incorrect because insurers must provide valid explanations for claim denials. Option C is incorrect because while insurers are required to handle claims promptly, they are not obligated to settle within 60 days in all cases, as more complex claims may require additional time. Option D is also wrong because claim denials must be based on the facts of the claim, not solely on the insurer's internal policies. Question 11. Which of the following is a key responsibility of the Nevada Division of Insurance? A. To set health insurance premiums for all policies sold in the state. B. To monitor and regulate the financial solvency of insurance companies. C. To develop new types of insurance products for insurers to offer in Nevada. D. To handle disputes between consumers and insurance agents. Answer B. Explanation. The Nevada Division of Insurance is responsible for regulating the financial solvency of insurance companies, ensuring they have the resources to pay claims. It does not set premiums, option A, or develop insurance products, option C. While the division may assist with consumer complaints, handling disputes between consumers and agents, option D, typically falls under other dispute resolution processes, not directly the division scope. Question 12. What does the Nevada cease and desist order entail for an insurance professional? A. It suspends the insurance professional's license temporarily while they are under investigation. B. It orders the insurance professional to stop certain actions or practices that violate the law. C. It requires the insurance professional to submit to background check by the Nevada Division of Insurance. D. It automatically revokes the insurance professional's license for any violation. Answer B. Explanation. A cease and desist order is issued when an insurance professional is found to be engaging in practices that violate Nevada insurance law. The order requires them to stop the specified activities immediately. It does not automatically suspend or revoke a license, option D, while a background check may occur in some cases, option C. The order itself specifically addresses halting prohibited conduct. Question 13. which of the following actions is considered a violation of Nevada's insurance laws regarding misrepresentation? A. Providing policyholder with clear and accurate descriptions of the coverage limits. B. Telling potential policyholder that policy covers damage when it actually does not. C. Explaining the policy terms to client in simple, understandable language. D. Recommending policy based on the client's needs without exaggerating the coverage. Answer. B. Explanation. Misrepresentation occurs when an insurance professional makes false or misleading statements about a policy's coverage, as in the example of telling policyholder that policy covers damage when it does not. Option B. Providing accurate and clear information. Option A. Or recommending policies based on client needs. Options C and D is not violation of Nevada's insurance laws. Question 14. What is the purpose of Nevada's Insurance Fraud Prevention Act? A. To regulate the advertising practices of insurance companies. B. To prevent fraudulent claims and other dishonest practices in the insurance industry. C. To protect insurance companies from fraudulent activities by policyholders. D. To provide legal immunity to insurance professionals involved in fraud investigations. Answer. B. Explanation. Nevada's Insurance Fraud Prevention Act is designed to prevent fraudulent claims and other dishonest practices within the insurance industry. It aims to reduce fraud by policyholders, agents, brokers, and insurers. While the Act does help protect insurance companies from fraudulent activities, Option C, its primary purpose is to prevent fraud, not regulate advertising. Option A, or provide immunity. Option D. Question 15. Which of the following is required for an individual to maintain an active insurance license in Nevada? A. The individual must submit proof of having sold a minimum number of policies annually. B. The individual must complete continuing education courses every 2 years. C. The individual must renew their license every year, regardless of the number of policies sold. D. The individual must pass a written examination every 2 years to renew their license. Answer. B. Explanation. In Nevada, licensed insurance professionals must complete continuing education courses every 2 years to maintain an active license. The requirement does not include selling a specific number of policies. Option A, or passing a written exam. Option D. For renewal. License renewal is typically every 2 years, but it's not dependent on yearly renewal process. Option C. Question 16. What is the minimum bond requirement for an insurance broker in Nevada? A. $1,000. B. $5,000. C. $10,000. D. $50,000. Answer. C. Explanation. In Nevada, insurance brokers are required to have a minimum bond of $10,000 as a financial safeguard for their business operations. This bond protects consumers in case the broker engages in unlawful or unethical conduct. Option A, B, and D are incorrect as they do not meet the bond requirements set by the state. Question 17. If an insurance policyholder in Nevada cancels their policy before the renewal date, which of the following is most likely? A. The insurer is required to refund the full amount of the premiums. B. The insurer must charge a cancellation fee but still refund any unearned premiums. C. The insurer will keep all premiums paid up to the cancellation date and issue no refund. D. The insurer may cancel the policy without any refund to the policyholder. Answer. B. Explanation. When a policyholder cancels their policy before the renewal date, the insurer is generally required to refund any unearned premiums that they may charge a cancellation fee. It's common practice for the insurer to issue partial refund for the unused portion of the policy, which is reflected in option B. Option is incorrect because insurers do not typically refund the full premium as cancellation fees may apply. Options C and D are incorrect because the insurer must provide refund for any unearned premium even if cancellation fee is charged. Question 18. Which of the following is an example of a violation of the Nevada insurance law regarding rebating? A. Offering a policyholder a discount on their premium if they purchase additional coverage. B. Providing a policyholder with a gift card as an incentive for renewing their policy. C. Allowing a policyholder to switch to a more affordable plan without an increase in premium. D. Offering a policyholder a low rate for maintaining a safe driving record. Answer. B. Explanation. Rebating occurs when an insurance agent offers a policyholder something of value, such as a gift card, as an incentive to purchase or renew a policy. This is a prohibited practice under Nevada law. Offering discounts on premiums, option A, or allowing policyholders to switch plans without an increase, option C, are not considered rebating. Offering low rates for safe behavior, option D, is common and lawful. Question 19. What is required of an insurance producer when an applicant submits a completed application for coverage in Nevada? A. The producer must approve the application immediately. B. The producer must provide the applicant with a copy of the completed application before submitting it to the insurer. C. The producer must ensure the applicant receives a medical examination prior to submitting the application. D. The producer must deny the application if the applicant has a previous insurance claim. Answer B. Explanation. In Nevada, when an applicant submits a completed application for coverage, the insurance producer is required to provide the applicant with the copy of the completed application before it is submitted to the insurer. This ensures the applicant has a record of what was submitted. Option A is incorrect because the producer is not authorized to approve the application directly. Option C is incorrect because a medical exam is not always required unless specified by the type of insurance. Option D is incorrect because past claims do not automatically result in a denial of coverage. Question 20. Which of the following would be considered an unfair trade practice under Nevada's insurance regulations? A. An insurer providing policyholder with clear written communication about coverage limits and exclusions. B. An agent recommending policy that is not in the best interest of the client in exchange for higher commission. C. An agent explaining policy details in simple terms to ensure the client understands the coverage. D. An insurer providing policyholders with annual reminders of their coverage options. Answer B. Explanation. Under Nevada's insurance regulations, recommending policy that is not in the best interest of the client for the sake of higher commission constitutes an unfair trade practice. This creates conflict of interest and violates ethical standards. Options A, C, and D are examples of best practices that comply with Nevada insurance laws. Providing clear and understandable communication and ensuring clients are aware of their options is encouraged and legal. Question 21. Which of the following is the primary function of the Nevada Insurance Guarantee Association? A. To pay for claims against insolvent insurers for policies issued in Nevada. B. To regulate the rates and premiums of insurance policies. C. To provide insurance coverage for high-risk individuals. D. To issue licenses to insurance agents and adjusters in Nevada. Answer A. Explanation. The Nevada Insurance Guarantee Association is designed to protect policyholders by paying claims when an insurer becomes insolvent. It does not regulate rates or issue licenses, options B and D, nor does it focus on high-risk individuals, option C. Question 22. Which of the following is required for an insurance agent to sell life insurance in Nevada? A. The agent must complete a pre-licensing education course for life insurance. B. The agent must have at least 5 years of experience in insurance sales. C. The agent must pass the Nevada health insurance exam. D. The agent must complete a criminal background check after licensing. Answer A. Explanation. To sell life insurance in Nevada, an insurance agent must complete a pre-licensing education course specifically for life insurance experience. Option B is not a requirement, nor is it required to pass the health insurance exam. Option C, or to undergo a background check after licensing. Option D. Question 23. Which of the following would be a valid reason for an insurance company to cancel a policyholder's auto insurance policy in Nevada? A. The policyholder has had one at-fault accident. B. The policyholder is caught driving without a license. C. The policyholder's car exceeds the specified age limit. D. The policyholder has paid their premium late once. Answer B. Explanation. An insurer can cancel an auto policy in Nevada if the policyholder is caught driving without a license, as this constitutes a breach of the terms. The insurer may not cancel for having one accident. Option A, the car's age. Option C, or a single late premium payment. Option D, though late payments could result in policy non-renewal. Question 24. What is the minimum liability coverage required for bodily injury per person in Nevada auto insurance policies? A. $15,000 per person. B. $25,000 per person. C. $30,000 per person. D. $50,000 per person. Answer B. Explanation. Nevada law requires minimum bodily injury liability coverage of $25,000 per person for auto insurance policies. The amounts stated in options A, C, and D are incorrect. Question 25. Which of the following would be covered under a typical Nevada homeowner's insurance policy? A. Intentional damage caused by the policyholder. B. Flood damage caused by river overflow. C. Guest is injured on the property and sues for medical expenses. D. Damage to car parked in the driveway due to vandalism. Answer. C. Explanation. A typical homeowner's insurance policy would cover liability for injuries to guests on the property, including medical expenses. Intentional damage, option A, and flood damage, option B, are typically excluded, and damage to vehicle is usually covered under auto insurance, option D, not homeowner's insurance. Question 26. What is the purpose of the Nevada Department of Insurance's market conduct examinations? A. To examine the financial solvency of insurance companies. B. To monitor and evaluate the insurance company's business practices for compliance with state laws. C. To assess whether an insurer is offering competitive premiums. D. To conduct criminal investigations against insurance agents. Answer. B. Explanation. The purpose of market conduct examinations is to ensure that insurance companies are complying with state laws and regulations, including fair treatment of policyholders and adherence to ethical business practices. These exams do not focus on financial solvency, option A, pricing competitiveness, option C, or criminal investigations, option D. Question 27. Under Nevada law, how long must an insurance agent maintain records of transactions related to insurance sales? A. 1 year. B. 3 years. C. 5 years. D. 7 years. Answer. B. Explanation. Nevada law requires insurance agents to maintain records of insurance sales for a minimum of 3 years. Options A, C, and D are incorrect, as the retention period is specified at 3 years. Question 20. Which of the following is true regarding Nevada's insurance code and enforcement? A. The insurance code is enforced by the Nevada Supreme Court only. B. The Nevada Division of Insurance has the authority to take action against violators of the code. C. Violations of the insurance code are only punishable by fines, never by license revocation. D. Enforcement of the insurance code is the sole responsibility of local authorities. Answer. B. Explanation. The Nevada Division of Insurance is responsible for enforcing the state's insurance code, which includes taking actions such as fines or license revocation for violations. The Supreme Court, option A, and local authorities, option D, may have roles, but enforcement falls to the division. Violations can lead to serious penalties, including license revocation, option C. Question 29. What does a personal injury protection (PIP) cover in Nevada auto insurance? A. Injuries to others caused by the policyholder's negligence. B. Damage to the insured vehicle in collision. C. Medical expenses for the policyholder and passengers after an accident. D. Loss of wages due to car accident. Answer. C. Explanation. Personal injury protection (PIP) is a type of auto insurance that covers medical expenses for the policyholder and passengers after an accident, regardless of fault. PIP does not cover property damage, option B, liability for injuries to others, option A, or loss of wages, option D, though some auto policies may offer additional coverage options for these. Question 30. Which of the following is required for an insurance company to issue a policy in Nevada? A. The insurance company must be accredited by the National Association of Insurance Commissioners, NAIC. B. The company must be licensed by the Nevada Division of Insurance. C. The company must be approved by the Nevada State Legislature. D. The company must only sell policies to residents of Nevada. Answer. B. Explanation. To operate in Nevada, an insurance company must be licensed by the Nevada Division of Insurance. Accreditation by the NAIC, option A, is not required, nor is approval by the state legislature, option C. Insurance companies can sell policies to residents of other states, not just Nevada, option D.